For several years, the crypto market has been evolving in a regulatory blur that suited many people. This allowed entrepreneurs to launch their businesses and to offer a number of crypto products extremely quickly, especially in the US. Basically, it was the Wild West 2.0, a digital gold rush that attracted all sorts of more or less reputable profiles that allowed certain abuses. Even if the situation has changed slightly since the ICO bubble in 2017, things really look like they are about to change with the arrival of Gary Gensler last April at the head of the SEC. The new boss of one of the most important institutions in the United States seems to want to put things in order. While one can still doubt the knowledge and understanding of the subject of Christine Lagarde, president of the ECB, Bruno Le Maire, Minister of Economy, or François Villeroy de Galhau, governor of the Bank of France, who often get their feet stuck in the carpet when trying to explain the differences between, for example, Bitcoin, stablecoins, and central bank digital currencies. Gary Gensler, on the other hand, understands the subject very well. For the record, he did give a course on blockchain and crypto at MIT. Even if it was only an introductory course that did not go into the technical details of the different protocols, we can assume that he has some knowledge. If you're interested, this famous course is available in its entirety on YouTube. Most crypto enthusiasts were excited to see someone like Gary Gensler take over the SEC. Having someone like him who understands the different issues and could really see the potential of these new technologies had to be an advantage for the crypto ecosystem. But it's not going quite as planned. Gensler and his team seem to be much more rigid than we imagined. Well, you should know that Gary Gensler had a first life before being a teacher and then working for the government. He spent 18 years at Goldman Sachs, one of the largest American investment banks. Without doubting the man's neutrality and objectivity, those years on Wall Street must have left some marks. Gensler said in all transparency that he was coming to put things in order, so a new sheriff is in town. In his sights are, among other things, ICOs, or initial coin offerings, and especially all the tokens that come with them, but also stablecoins and crypto lending and borrowing solutions to generate returns. And it's on this last point that the situation has evolved in recent weeks, and especially with the company Coinbase, the California-based exchange platform that recently went public on the NASDAQ. And that's what we'll discuss in this video. Come on, let's go. For the record, Coinbase has been working for some time on a new crypto lending and borrowing module called Lend that they were going to offer to their clients to allow them to generate yields on their crypto assets, especially on their stablecoins. We had just made a video a few weeks ago about this kind of service that can offer up to 12% interest. To make a long story short, this is a system of pawnbroking, also known as collateral or Lombard loans, applied to the crypto world. Considering Coinbase's position on the market and its recent IPO, the Californian company did not want to take any risks with the SEC. We are far from the style of the startup companies of the Silicon Valley. Move fast and break things. In this case, Coinbase wanted to do the right thing and went to proactively ask the SEC what they thought about this new lending initiative. In my opinion, they were 99.9% sure that there would be no problem knowing that other competitors already offer the same type of product on the American market. But to everyone's surprise, the SEC replied that this new product did not comply with the regulations in force. When Coinbase wanted to know more to understand the reasons for this refusal and to obtain the necessary instructions to comply, the SEC simply replied that if Coinbase persisted in this way, the administration would sue them. Following the SEC's decision, here's what Brian Armstrong, Coinbase's CEO, tweeted. They, the SEC, refuses to tell us why they think it's a security, and instead subpoena a bunch of records from us, we comply, demand testimony from our employees, we comply, and then tell us they will be suing us if we proceed to launch, with zero explanation as to why. According to the SEC, this new product falls into a category of securities, which could be translated as investment contracts or regulated financial securities. This includes, for example, stocks, bonds, or certain investment funds. Basically, it is any investment involving a third-party company where the investors expect to make a profit based on the performance of the company in question. If you want more information on this, I recommend you look up the Howey test. This is what the SEC most often uses to determine whether or not a financial product falls into the securities category. It is important to know that as soon as you fall into this category, you enter the territory of the SEC, and there it is no joke. To issue, offer, and even trade securities in the United States, you have to follow a complex regulatory framework that requires relatively expensive administrative procedures. This is often an unfeasible process for small structures or startups with limited means. Officially, all the rules and regulations imposed by the SEC are supposed to protect small investors, avoid fraudulent manipulations, and create a fair financial market for all players in the sector. To be honest with you, I was extremely surprised by the SEC response to Coinbase. First, because I thought that the first big issue for Gensler would not be the lending and borrowing of stablecoins, but rather re-qualifying a number of cryptocurrencies and tokens as securities. Basically, today, a large part of the crypto listed on the exchange could and most likely will be considered as securities and will therefore have to be submitted to the SEC requirements. And I can tell you that when this happens, it will make a lot of noise and it will most likely shake the crypto market. Spared will be utility tokens and cryptos that are considered digital commodities. That is only Bitcoin and Ethereum for now. The definition of a utility token is very vague, and the line separating them from security tokens is extremely thin. In most cases, it will be very difficult to rule, and the decision will be left to the SEC. This debate on the definition of a security token is currently at the heart of the lawsuit in which Ripple has been involved for several months regarding the XRP token. The day of the ICOs, when any teenager was able to raise $60 million from his parents' garage, seemed to be over. And secondly, this reaction from the SEC was really surprising because, as I said just before, this kind of product has been around in the US for years. Companies like BlockFi have been offering lending-borrowing services since 2017 without the SEC saying anything. Even if some states have been more or less flexible on this subject, it had never gone up to the federal level, so this reaction of the SEC towards Coinbase really surprised the crypto world. In the end, Coinbase decided to retract and cancel their new initiative. The California-based company will remain on the sidelines until the regulatory landscape around crypto lending services becomes more transparent, and they are especially waiting to see what the SEC will do regarding the lending products already on the market. Everyone is watching the issue very closely, as it could have significant implications for the rest of the ecosystem. Radical action of the American administration on this sector could give ideas to the European and French regulatory bodies. We wanted to know what Owen Simonin, alias Hasher, thought about it. He recently launched a lending service on his platform, Just Mining, in France. So basically, for the moment, the French crypto players are relatively serene given the clarity and precision of the French regulatory framework, which excludes stablecoin lending from the regulated financial security sector. We also had the opportunity to ask the question to William O'Rourke, lawyer, partner, and co-founder of the ORWL law firm, expert in the legal support of innovative projects and particularly specialized in the law related to crypto. So, strangely, it seems that France has a head start on this subject. The AMF and the PSAN, or Digital Asset Service Provider approval, provides a clear framework for French crypto players. Now, as William said, the US crypto market is much larger than the French or European one. So the level of oversight and attention to this new industry is not at all the same. And then there is a fundamental difference in mentality. In France, people tend to wait to understand the rules before acting, whereas in the US, they are much more rock and roll, to go for it until they are told it's forbidden. It's going to be extremely interesting to watch the SEC's next actions carefully. Everyone in the crypto industry is following the Coinbase, Ripple, but also the Uniswap and BlockFi cases very closely. The outcome of these discussions will most likely serve as a case law in the future in the US and could have serious repercussions in Europe. There's a real desire to regulate the crypto ecosystem. Now, the regulation of financial markets was written several years ago and does not necessarily correspond to the digital reality in which we evolve today, and even less to the world of decentralized finance that is taking shape. The challenge for Gary Gensler and his team is immense: to find a right balance between regulation, taxation, freedom, and innovation in order to not see this technological wave slip through their fingers. Too much regulation could push the main players in the sector to relocate their activities to countries where the jurisdiction is more flexible. There are two ways of looking at this tightening of the SEC. Some welcome it because large investment funds on other institutions need this clear and transparent regulatory framework vis-a-vis money laundering and financing of illicit activities to eventually start allocating a small portion of their portfolio in crypto. Many say that without this approval from the US federal financial market regulators and supervisors, Bitcoin will never reach 6 figures. And on the other hand, there are also those who see these SEC actions as one more step away from the ideal of the cyberpunk who started the project fighting for individual freedom and privacy. They see their dream of a decentralized financial and monetary system, not controlled by oligarchs in suits, shattered on the walls of Wall Street. The SEC seems to have won a battle, but not the war. To be continued. On that note, see you soon for new videos. Ciao.
Thank you so much for watching. If you like my videos, please subscribe and don't forget to hit the bell if you want to be notified of the next episode. And if you want to invest in the stock market over the long term or diversify your financial portfolio, I'm offering you an analysis of the 8 European star stocks to have. Thanks again for watching and have a great day.